You can always go by it over and over and over again. You understand? It's not once. You don't get it once. Okay, it's when you are studying it over and over again, you tend to, get it. So market
Okay, no
structure.
problem, bro.
All right, Chief. Market structure. So we are going to be looking at basic market structure. What is basic market structure? This simply means your usual support, resistance, basic market structure. This has to do with your usual support and resistance. So you know that market moves in higher highs, higher lows. You know that, right? Or lower lows, lower highs.
Yeah, that's right.
Market moves like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So all these are structures in the market. If it's going down, lower highs, lower low, lower highs, lower low, lower high, lower low, it's still a structure. Sorry.
Yeah.
It's a structure. Then we also have what we call a ranging market. Yeah, we also have what we call a ranging market. So in this uptrend, buyers are more active in this market. You know that, okay, price is pushing to the upside. What does it mean? It means that there are people actually buying these assets or this instruments. And the more people buy, the more the price pushes to the upside. Okay, we call this an uptrend. We call this a downtrend. Now, a downtrend, this gives us a lower high, lower low. It means the sellers are more active than the buyers in the markets. Okay, there are more people selling this particular instrument or assets than the buyers. So when the market is in an uptrend, there's a term that they give it. It means the market is bullish, right? And when the market is selling to the downside in the downtrend, it means the market is bearish. Okay?
Yeah.
Those are the terms.
Very clear.
Market. Good. And when markets tends to, be stagnant, when the price of a particular asset is stagnant or is just ranging around a particular price, we call that market a ranging market. Now, we call it a ranging market because the sellers are not overshadowing the buyers. The buyers are not overpowering the sellers. So they have equal ratio. Okay, so let's assume price is ranging around here. This is like $200 and this is like $100. So price is ranging around $100 to $200 within that zone.
Yeah.
So price might go 150, price might go 200, price might go 120, price might go 130, 260, 280, but it will not go above 200 and it will not go below 100. That's a ranging market, and these are the kind of markets we want to stay away from, a ranging market. But when we see something like this, let's assume price pushes to the downside like this. We know that, okay, now price has finally broken to the upside. And what does it mean? Sellers are now more active in this market, unlike the buyers. Okay, that's what it means, basically.
Yeah.
Sorry. So, but if we see something like this, if you see market doing this, we know that, okay, this is not a bullish market because price has broken to the upside, which means price is going to keep selling. So that's where your higher highs, higher lows tend to come in. Price start giving you this structure, giving you this structure, giving you this structure, giving you this structure, like that, till it keeps going up. Are you getting my point?
Very clear, bro.
Okay, good. So that's what happens in basic market structure. And in this basic market structure, this is where your support and resistance comes in. You know that, okay, if market breaks out to the upside, price is supposed to come back and retest on this support level to continue to the upside. It's supposed to break out from here, retest the support level, continue to the upside, right? Break out from here, retest the support level, continue to the upside. You know what support level is now? When market breaks out from a particular place, yes, and it retests, it comes back to retest. It creates a support for it to continue to the upside. Same thing as this downtrend here. Same thing here. Okay, but the thing is that market, realistically, if we want to be honest with ourselves, market does not actually move like this. Because if market moves like this, we would all be rich. We would all be billionaires. Because we already know that, okay, once market breaks out, we are waiting for market to retest the support and then continues. We can we can risk as much as we want because we know that okay, this is what market wants. But that's not realistic. Okay, what market actually does is this sort of movement in the market. Market will do something like give you a higher low, higher high, take out liquidity, go to the upside, higher low, higher high, take out liquidity, upside, higher low, higher high, take out liquidity, upside, like that. That's what price is still going to keep doing. Take out liquidity, downside, higher, lower high, lower low, take out liquidity, downside. This is how market actually moves. Okay, and all of this are what we call the advanced market structure. Please, I hope I'm not too fast.
No, it's very clear, bro. Don't worry, it's
This
very
is what we
clear.
call the advanced market structure. Right?
Yeah.
Yeah. Because you can see how simple this movement is, and you can see how complex this movement is. And if you notice, it's still going to the upside. It's still giving you break of structure to the upside, but it's not in a smooth road. This is more like the road to success.
Okay.
Okay. This is more like the road to success. It's going up, but it's not going in a smooth direction. You understand? It can never be easy. The market makers can never make it easy for us. If you go on the higher time frame, you see that this is one move on its own to the upside. Since it's giving you a break of structure to the upside, it's giving you a higher price. Then we know that, okay, yeah, this is where market started changing direction to the downside. Yeah, like this. But it's still on the downside. Okay, it's not a simple structure, but it still shows that okay, this market is actually going this direction. Because the market makers will never make it easy for us. All right, because they need people to lose in order for them to make money in the market. If everyone is winning, who will be losing? How would there be liquidity in the market? The market will not move now.
Of course.
Yes, because someone has to lose for someone to win. You understand? So that is market basically. 100%. It's just like when you have a vehicle, and you don't have fuel in your vehicle, it will move. And that's the same thing as liquidity in the market. Without liquidity in the market will not move. It will just keep ranging within this zone. Okay, so the rule that goes with the advanced market structure states that there must always be a sweep of liquidity. Always be a sweep of liquidity. So price taking out all of these higher lows, they're all just sweep of liquidity. So price is sweeping liquidity to continue to the upside. That's the rule. There must be a sweep of liquidity before price continues its direction to either the upside or the downside. You can see there must always be a sweep of liquidity before price continues to the upside or the downside. Now, this is a bearish sweep of liquidity, right? Same thing. If price does this, so price is basically just taking people out in order for them to move finally. So people trading this basic market structure are more of like the early buyers and early sellers. When you are in the market prematurely, you know that okay, market is not ready to move yet. You are just into, because all of this, they are forming liquidity for this advanced market structure to take place. All of these are just forming liquidity for this market structure, for this advanced market structure to take place. Because market is definitely going to take this out later. Market might do something like this, take all of this liquidity out, and then continue to the upside. Are you getting my point?
Very clear, bro.
So now, this is what we want to focus on, this advanced market structure. Because they say if you can't spot the liquidity, you tend to become the liquidity. That's just the simple truth. If you can't spot the liquidity, you become the liquidity. Okay, so now we know that market moves from one point to the other, right? Market moves from point A to point B to point C, right? And what would we call that movement? We call that movement a swing structure. We call that movement a swing structure. When price moves from here, point A to point C, we call that a swing structure. Because now in this movement, there will be this point A, right? So market will do something like this, give you this move, right? Retrace, give you a B, give you a C, right? These are market moves. Gives you a where the point where the price is starting from is your distance, your point A. You get your swing structure. So this is like your swing high, and this is your swing low. This is your swing low, yeah. I mean, sorry, this is your swing high, this is your swing low.
Swing low.
So
Yeah, I get
this is
you.
how market moves. So now you want to trade within this swing structure, right? You want to trade within this swing structure. If market is showing you that it's bullish in your swing structure, you want to be looking out for buys, right? You want to be looking out for buys. So what does market do? Market will do, sorry, 1 minute. Market will do something like this. Market is supposed to do this, right? Gives you a higher high, higher low, higher high, higher low, higher high, higher low, higher high, right?
Yeah.
But in the advanced market structure, what do we want to see? We want to see a what? A sweep of liquidity. We want to see price do like do this, take this out, gives you this, a higher high, a higher low, a higher low, right? A higher high,
Yeah.
then price will come back, tap into this place, then continue. Right? So we call this our point, we call this point our point A. We call this our point A. Right? We call this our point A. We call the retracement our point B. Our point B. So let me write it out. This is our point A. So this is the advanced market structure. Let's follow up, please. Please, if you have questions,
Okay.
you can always ask. That's the purpose of this one. You need to be able to, yes, to ask questions whenever. Doesn't matter. You're not cutting me out. Just ask questions.
Okay.
So I know
Yeah,
you
because I was thinking I was gonna cut you out. That's why I was waiting.
no,
Yeah.
no, 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 no. That's the whole point. Although in the group mentorship, I don't take like I don't let people distract me and stuff. So, but this is a one-on-one class. It's an interactive class. So you need to ask questions. You need to speak up. You understand?
Okay.
Yeah.
Okay.
So this is our point A, right? So where price retraced to, and then gives us a higher high, because this is a higher high, this is a higher low, right? Then this is under higher
Yeah.
high. So we tend to call this our point B. This becomes our point B. The retracement becomes our point B. Then the final destination of this is our point C. Let's use this instead. This is our point C because this is the final destination, right? Because price has
Yeah.
done this higher high, higher low, higher high. So this is our point C here. Then there's this rule that says that B must be taken out. You see this B right here?
Yeah.
This B is your enemy in the advanced market structure. Like this is your number one enemy here. This B. Without taking out this B, trust me, market will not
What's
move
gonna
yet in
happen?
that direction.
Okay.
So this is your number one enemy. You need to make sure that B is taken out. Okay?
Yeah. Okay.
B is
Okay.
always
I got
taken
you.
out. So this B is your liquidity in the markets. Please, are you following?
Yeah. So quick
B,
question. If
yeah, I'm listening.
B is not taken, yeah. Let's say B is not taken and it takes out C and then creates another low and then creates another high. What
Okay,
happens
let's say
next?
it takes out C, right? Like
Yeah.
this. Then it creates another low like this, right?
Yeah.
Then it
And then
creates
creates
another
a
high like this,
yeah.
right? Now, I want you to look at this. This B is still your enemy. This B here. Because
Okay.
what makes it valid? What will make this valid? If there was, let's assume there was a sweep of liquidity somewhere around here. Remember your number one rule in the advanced market structure, there must be a sweep of liquidity.
Yeah.
And do you know what a sweep of liquidity means? When price takes out a previous low and then breaks structure to the upside, you have a sweep of liquidity. Okay?
Okay.
If price
I get
does
you.
this, if price breaks, if price takes out the previous high, this is your previous high. If price takes it out, which is this, and breaks structure to the downside, you have a bearish sweep of liquidity. Because this right here will
Okay.
become your liquidity that was swept. Okay? So once
Yeah.
price breaks structure to the downside and price retraces, you know that okay, price breaks structure again to this downside, giving you two breaks. right? You know that this then
Yep.
becomes your B, right? And B must be taken out because you will need to draw out your POI here for B to be taken out. Tap into this POI and then continue. But over here, we are not seeing that here. We are not seeing that here. We are not seeing a sweep of liquidity here. You understand? We are not
Yeah, I
seeing a sweep
get
of
you.
liquidity there. So assuming there was a low here, assuming there was a previous low here, well, let's assume price did something like this. Assuming price did something like this now,
Okay.
takes out this low.
So that becomes the liquidity now.
Yes. Thank you. Then it gives you this higher low, right? Give you this higher high.
Yeah.
Now, this is more valid. Because now,
Okay.
this has taken out the previous low, and it did what? It broke structure to the upside,
Yes.
right? So this then becomes your B.
So that resets the structure, right?
Yeah?
Does it resets the structure?
Thank you. Exactly.
Yeah.
So this now, since this here has been taken out, then price shifts liquidity here, right? Price shifts liquidity here. Then price gives you a B here. You know that this B now is now your new enemy.
Okay.
Yes, this new B is your new enemy. So what will you wait for? You wait for this B to be taken out. That is the rule. B must always be taken out. Always.
Okay.
If B
Okay.
has not
That's
been
good.
taken out yet, I won't be interested in that market to take that trade.
You
So
know,
you need to
sometimes it
wait.
can be tempting.
Eh?
Yeah, sorry to cut you, but I say sometimes it can be tempting, if it keeps creating highs and
Exactly.
never takes the low.
Exactly. That's the thing. You see all those temptation here? Those are just it's just markets trying to manipulate you psychologically. It wants you to
Yeah,
enter that trade by all means so that it will take you out. It's you against the market. Okay, it's you
that's
against the
true.
market. So you need to fight it. You need to fight that psychology behind the fact that okay, you want to enter trade so badly. You need to resist that temptation because once you are in that trade so early, price is going to know that okay, these people are already in this trade now and they enter prematurely. What should we do? Let's come back and take them out of the market so that we will
Of
have
course.
money to move to the upside. Take you out. So you'll be like, oh, let's assume you're already riding this buy. You're already here riding this buy all the way to this place, and you're up, like say, a $500. You're up $500, right? Then you see
Yeah.
market do something like this. The market will just come in from nowhere, take you out, and then skyrocket to like $2,000. And you'll be like, why did I miss this? What happened? Why did the market stop me out? You'll be so angry, not knowing that you're
Yeah,
just being the target.
it
Okay?
happened to me today on, I think, gold. It
Yeah, right?
came, took me out, and then yeah,
That is what
flew off.
happens. Price will take you out and then goes to your direction. You'll be like, but my analysis was correct. Why did it take me out? It has ETP, it has smashed TP. I would have been up $2,000, but now I've lost money. You'll be angry at
That's
yourself,
true.
not knowing that it was your own fault because you were such in a hurry to take a trade. Now, look at these trades that I have. Do you know how many hours I've been waiting for these trades to play out? Because now this is my B. Okay, I'm waiting for it to come and
Yeah.
be taken out so I can enter this cell. Now look at this again. This is also my B. I'm waiting for this to come and take out this B, then continue. I've been waiting hours for this trade. Quality over
True.
quantity, bro. Quality over
That's
quantity.
true.
You don't want to be losing unnecessarily. You want to lose knowing that okay, you lost, but it was worth it.
But quality losses, yeah, it makes
Yeah, you
sense.
you know it was worth it because you know that if this had gone your way, you'd have made good profit for that day. Not just jumping onto random trades. Now look at this as well. This is my A, this is my B, this is my C, right? I'm waiting for price to
Yeah.
see. Look at what happened. Price did this, right? This was initially my C because price was already in this zone here. 1 minute, please. Price was already here when it started. Sorry, price was already here because I did the analysis when market was here. I was hoping that okay, price was going to take this out and then sell off. But what did it do? It broke structure again to the downside. Then what's it
Yeah.
trying to do now? It's trying to go back up to tap into this B, take it out, and then continue. Now I've been waiting for this trade since I think 8 o'clock in the morning. Now this was what? Okay, this was 11 o'clock in the morning, right? And what's the time now? This is 6:30. Is it 6:30?
6, yeah.
Sorry.
What
So you
time
can
is it?
imagine
6, yeah, 6:40.
okay, so you can imagine how long I've been waiting for this trade for hours. I don't just enter trades randomly, no, because I don't want to lose money. You understand? But I know
Yeah,
that if I
that's
want to,
true. That's
Jesus, look at this trade, though.
true.
Oh,
It's flooding.
pain, bro, pain.
It is, yeah.
Do you know that this morning I took this trade? Was it? No, it was in the afternoon. I think around this was my entry.
It looks clear, very clear,
Yeah,
yeah.
like look at this now. This is my swing structure, my swing eye, my swing glow,
Right.
right? Oh God,
Yeah.
I'm so angry at myself right now because I would have
It
been up
shouldn't be.
at least $2,000 right now.
It's
Shit.
we come for another day. We come for another day.
Definitely.
Yeah.
You understand? So I'm not bothered because I know that opportunities will always come in the market. Okay.
True.
So I always like tend to forgive myself if I miss out on the trade. But what hurts me most here is that I had this setup. I've been waiting for like over 12 hours for this setup. Then it finally gave me what I wanted. This gave me my A. Now this is my C, right? So where's my B? The B is always your closest eye, your closest eye to the protected eye. So this is my protected eye because there was a sweep of liquidity here, as you can see, right?
Yeah,
There's
very
a sweep of
clear.
liquidity there, and there was a break of structure here. Now, where is the closest eye to this eye? Is this, right?
Yeah.
This on the 5 minute time frame. This is the closest eye. Oh, Jesus Christ. So now
Easy.
this is my B, and B is my enemy. What must happen to B? B must be taken out.
We're taking out, yeah.
Yes, it's the rule. That is your rule. You know that once you have a B, just wait. All this move here does not concern you. All of this move here does not concern you. You are not interested in this move here. You don't want to take this. This is your quality trade. This is where you want to take your entry from. Okay, this is where you want to take your entry from. All of this here. Anything above this B is where you want to start taking entries from. And look at what happened. I think I was already up around. Okay, I entered my first sell from here.
Did you close it manually?
Huh?
I said, did you close it manually? What happened?
Okay, now let me tell you what happened. So I saw this trade. I waited for hours, 12 hours approximately. Then market took out this B, and this was my target here. Market took out this B, gave me a confirmation here to enter this trade. This was the first confirmation I had. Then I got in on this trade. I was already up here. This was where market was. I was already up around. I think market was around here.
Yeah.
I think I was up around almost, was it not $500, if not more. Yeah, because I only posted a screenshot of when I was up $300, but then it went deeper. It went somewhere around here. So I should have been up 500 here. Okay.
Yeah.
So this is what happened. Market did this. Went back to my entry. Market did this. Went back to my entry. I was stopped out because I was stacking. I was over leveraging, which is what I do whenever I'm entering.
Overloading, yeah.
Yes, which is what I do whenever I want to flip small accounts, because I know that okay, market has given me a confirmation, so market is not supposed to come back here again. So I was not expecting market to come back here. So I just like turned off the my laptop, went out about my day, and then I just saw it because I was hoping that once I get back home, I will see price here already. I will be seeing price here already, almost at my TP. That was what I had in mind.
Yeah.
I mean, I should be up around, let's say, if price is here, that means I should be up, if this is 500, let's say, here should be up 1,000 something,
1,000,
1,200.
yeah.
You understand? So that was the plan.
Yeah.
So, but look at what happened. Market did this, took me out. I entered again. When I saw that it took me out, I entered again. I was already up, how much again? I think I was up around 400 again.
Almost
Yeah.
500. Yeah.
Yeah, I was up 400 again. Then what happened? I thought that was the final move. That, okay, market cannot go back. Look, I can see the
That's
manipulation.
the
Market
game.
cannot go back up here now. Why would market want to reverse all the way here again?
You know,
Do you
it's
understand?
crazy.
So you
The
can see
game
how
is
crazy it
crazy.
was. So this is what happened. Then I was like, Jesus Christ. Market has given me another confirmation again that I want to say, because this is my protected eye. It's not supposed to go above this. I saw that, okay, market was rejecting from this zone. Fine. Then I
Yeah.
saw it. I
And
was
it
like,
closed.
okay, I think
It
this should
closed
be.
below. Yeah, it closed
Yes,
below as well.
it
So
closed
it's
back
good.
inside the structure.
Yeah.
So I was like, this should be the last confirmation. Yeah. But the funniest part was that I did not see it early enough. I think I saw it around here. Yeah, around here. This was where I saw it.
Yeah.
So, and I was like, okay, should I risk on this trade again? I got, bro, look at it. What will you do if it was you?
Yeah.
Because me,
You
I
know
was
how the
already,
market, the big
you
boys,
get
they try to make you weak. You know, you
manipulation
get
here and there. Me, I was already certain that this was a sell market. This was going to sell. But now the entry was the problem. Why was market stopping me out? You understand?
I said
So
you
I
did
now looked
well
at
for
this.
taking
I
it.
felt okay, maybe there was this structure here, this B. I think there was a B here. I think this was the B market was actually targeting. Look at this B right here.
True.
This was an
Yeah.
hidden B. If you got a 3 minutes time frame, you see it clearly. This was an hidden
Yeah.
B.
Yeah.
But I did not, my mind was not there. Like it was just a week, so I could not see it clearly. This was what I was seeing as the B, not knowing that market was trying to target this. You can see as market took it out, yeah. Then this was now
Yeah.
your
Just
confirmation for the sell. Look at this sell-off, bro. Look at this sell-off now. Look at this sell-off.
very clear. Very clear. Very clear.
Now, imagine I have stacked those positions, yeah, which I did.
That's why you,
I later eventually
the
stacked
broker
my
will call
positions.
you.
Yeah, you understand? I took my positions here. This was my entry, but then market is supposed to just keep falling. Then look at this candle. Look at this candle.
It's
Market was just
crazy.
after my life today, bro. Like market was after my life. Look at this. This was my entry. I think I entered around here. This when market closed in back here. I start my positions here. In this black candlestick here. Can you see this black candlestick?
Yeah, I see it.
This was where I start my position. JJ. I just put my positions in. Then look at what happened.
Did you stack
Look at
again?
this. Look at what happened. Look at this retracement. All the way up here. All the way up here. God. 80% of my positions were closed, bro. 80% of my positions. Because
not
it's a
again,
small
yeah.
account. I'm flipping normally. Because it's more riskier when you're trying to flip. If you're trying to play safe on a bigger account, you can easily just put your entry here, put your stop loss above the eye, then go
Big
about
stop
your day.
loss.
But it won't give you the kind of result. It won't give you $20 to 1,000. It won't give you $100 to 5,000. No. But when you enter a precise entry, that will give you that amount. So I'm already good at stacking and flipping. I already know that okay, market is not supposed to retrace. It's supposed to just keep selling off. Okay, because it has already done this. It has already given this confirmation that I wanted to sell. But then when it took me out of the market, look at what then happened. Look at all this things that happened.
It's just
So you
dropping
can
big time.
imagine how painful this would be.
It is.
You can imagine how painful after waiting that long, after waiting this long,
And then fighting the market like 3 times,
3 times, bro. I got in, yeah.
It's crazy.
I got in, yeah. I got in, yeah. Then what happened? After closing 80% of my position, market was already around here. And I think I had about $8 balance left. And my equity was already floating around $80 around here. $80
Yeah.
around here. Bro, I was no longer interested in that trade again. Because I knew that, okay, if I actually add my $50 in that trade, still running, I would be up at least $500. No, what's $500? $800. Yes,
Easy, yeah,
because I
easy.
started here and I think market was around here and I was up $80. I was like $8 to $80 more. It was just crazy because I knew how much I would have been up. And if market had gone all the way down here, I would have been up over $2,000 from this entry here. Yes, that was the plan. But then that happened. I was like, I'm no longer interested in this trade. I just closed the trade and I just closed my laptop because it pissed me off. Imagine market doing this the first time, the second time, and the third time.
Yes,
So annoying.
it's gonna break your ribs.
I'm telling you. So I just like had to close that market. I was no longer interested in it. I just had to go and look for another setup tonight that will trade. So that's what I'm trying to tell you, bro. Yes, you can see market respected. Yeah.
Sorry, what's the best time do you trade? What times do you trade
That's the
normally?
beauty about synthetics. When you're trading indices, indices does not really have a particular time. You can trade at any time. It's not like the forex market, the currency pairs, whereby you have the kill zones like the London session, the New York session, and all that. You can trade at any given time. Okay, you can trade at 1 p.m., at 5 p.m., at 8 p.m., 10 p.m., 11 p.m., 12
That's
p.m.,
nice.
12 a.m., 1 a.m., 3 a.m., 4 a.m., 5 a.m., round the clock. You can trade whenever. That's one thing I love about synthetics, and that's more of the reason why I trade only synthetics, because I'm free to trade
That's
whenever I like. Okay,
nice.
whenever I like.
Yeah.
So that's just it, bro. I think our time is almost up, but I want to give you an assignment. I want you to go
No
on your
problem.
chart. Sorry.
Yeah, I'm waiting. I'm waiting for the
Okay, I
assignment.
need you to go on your chart. I need you to
Okay.
give me live analysis, not the ones that have played out already. Go on any chart of your choice. It could be currency pairs, it could be synthetics, it could be gold, commodities, anyone. Just mark out your A, right? Mark out your B,
Yeah.
mark out your B, mark out your sweep of liquidity, right? Mark out your
Yeah.
break of structure, and mark out your C. This should be your C. And mark out your C. Okay? Just mark
Okay.
out your A,
Okay.
your B, your C. I want to see them. Give me 5 for sell. Give me 5 for buy. All right?
No
So you're
problem.
basically
Yeah.
doing analysis for what's to come in the market, maybe tonight or tomorrow. Okay? Because I can also
Yeah.
see, let me give you one example. I can see, what can you see here? You can see a swing structure from here. This is your A here, right? Let's
Yeah.
take this as our C, right?
Yeah.
Now, remember, what's B? B is the closest eye to your
Hey.
previous eye, to your protected eye. So this is your protected eye, because what happened? It swept liquidity, right?
Yeah.
This market swept liquidity. It also swept this liquidity here as well. You can see that, okay, this is
So
a strong eye. Market is not supposed
strong.
to
Yeah.
come and take it out anytime soon, right? So now, this is our A, this is our C. Now, where's our B? Our B is our closest eye to the C, to the A. So I want to use this as our B, right? Then this
Yes.
should be our PY, right?
Okay.
Then what's market supposed to do? Market is supposed to come and do what? Fight your enemy.
Take
Take out your
B.
enemy,
Yeah.
B, right? Then
And
continue
then
selling.
drop to C.
That's
Okay.
what market is supposed to do. Take out your B all the time. Okay, brother.
Thank you very much for your time,
I hope
big
I'm
bro.
clear on today's session, please. I hope I'm clear.
Very clear. Very clear. Any
Okay,
questions?
thank you
I'll
very
just
much.
hit you up. Thanks
Thank
for
you.
your time.
Please work on the assignment, and I want to see them before weekend. Okay.
Yeah, sure. Sure. I'll
All
send
right.
you.
All right.
Thank
Thank
you
you
very
very much.
much.
I'm going to send the recorded session to you.
The video. Yeah. Thank you.
All right. Have a
Yes.
nice evening. Yeah.
Take care. You too, bro. Bye.